Hey, what's happening, everybody? It's Adrian here coming to you with yet another episode. And today, what I want to get into is the obvious inflation numbers that we've just had come out. And I really want to get into this because this is super interesting to me. I'm just going to switch over here immediately and just give you the news quickly.
First, the inflation figures being released right now, crucial to any Reserve Bank decision on rate cuts. Let's go straight to political editor Charles.
I can barely handle listening to this.
Charles, we are live with you as
My goodness.
figures are flashing up from the Bureau of Statistics.
Yep, inflation figures fall. What do you do?
The headline inflation figure is 2.4% year on year. That is much better than was forecast.
All right, shut him up. All right, look, seriously, the situation here is that when you consider what's happening with inflation, it's all around us. I've been talking about inflation for a long, long time. Inflation is 100% going to get progressively worse. And the thing is actually what they talk about a lot right now, as you might have seen, and I'm just going to be really quick in this video, is the prospect of interest rates falling. I think that there was another piece here. Yeah, okay, I'll just quickly show you this. Like, there's another piece here with potential interest rate cut gives pre-election boost to government, whatever. So they talk about how it's got something to do with the magic of an election coming up, right? They talk about how this is something to do with this election and, they're going to cut some interest rates and it's political and nonsense like that. Look, there's always the chance of that because people do buy into, obviously, seeing some prosperity when it comes to the government that they're going to elect. But let me tell you this is the funniest thing about all this, because inflation numbers are low. It's all in my head that everything's more expensive, I guess. Maybe I should get myself checked out. But when you go in to buy eggs and they're not there, and you go in to buy eggs and they're like $14, this is what I call inflation. Everything's more expensive. Energy, that's a different topic completely because it comes around the concept of the fancy footwork to mitigate a problem that doesn't even exist. So you've got this climate nonsense and, let's just, use all these different weird mechanisms to get energy when we live in an energy abundant, country. And of course, we take that energy, we send it somewhere else to be basically processed where all the carbon emissions come from, all this crap that they talk about. And essentially, then we buy energy back from China. So China is a place that climate change doesn't exist, all right? So they said, we'll join the climate change thing, down the line. We'll jump into it in, 2035 or something. I can't remember the exact year. I think it was like 2033, 2035. They promised to jump into it whenever other countries slit their own throats. But that's a separate topic. Let's not even get into it right now. This one here, this is an interesting one where these guys are sort of just going on about how they're going to, are the interest rates going to come down? Hope on the horizon for interest rate cuts. Let me just shut them up because honestly, I can't be bothered listening to it. You guys can check out all the news you want to check out. You've probably seen it already. My point to you here is that when it comes to the inflation, numbers, the way inflation rises is from money printing. So if you remember the C19, remember 2020 to 2022, that sort of era where we had this special money being printed into the world, into the atmosphere, that was all inflationary. So that money was invented out of thin air and ultimately went into the system that was an economy that was basically at zero because the government made it illegal to work. And then people just still got paid and went and spent money. Obviously, it's going to cause, no production, high inflation, period, the end. Obvious, okay? So money printing causes inflation. Money printing is low interest rates. I just want to set the record straight here because I spoke to someone today on the phone on a call and they didn't understand this very simple topic. That a Federal Reserve Bank or a central bank or an RBA or whoever, they cannot make interest rates lower. They cannot wave a magic wand and say interest rates are just going to be lower from here on out. I'm the Wizard of Oz. They're lower. Go and have fun. It doesn't work like that. They have to actually affect the rate of interest on money. So it's like you're driving along, let's say, at 50 kilometers an hour, and you're like, let's set a target rate of 100 kilometers an hour. You don't just appear at 100 kilometers an hour. You have to put your foot down. You have to force that velocity to take place by, fuel combusting in the engine, the rubber meeting the road, having the road ahead of you. You have to eventually get to 100 kilometers an hour. And if you want a 200 kilometers an hour, you have to keep planting that foot. So the central banks can say, we want a target rate But the way they put their foot down is simply doing a little fancy work where they buy bonds and put that money that's invented into the system, into the government, and then they lend it out. Okay, so it's very much a matter of creating the money out of thin air to buy something that no one else wants to buy, to put that into the system and basically call that, lowering interest rates. The money has to be created, put into the system, put into the banks. Once the banks have a surplus of money, once money is too abundant, it becomes worth less, therefore has less value in terms of an interest rate. And that's how the interest rates come down. So in another perspective, like on a personal perspective for you, for me, for everyone else in the world, lower interest rates means lower purchasing power of your money. Lower purchasing power of your money means 5 years ago, if you went and bought a property for $1 million and you went today to try to buy you had that same million and you want to buy that same property, it doesn't work. The purchasing power of your money against the real estate no longer works. Okay? It doesn't work anymore. It's a system that's broken. All right? So the price of things is either going up or the purchasing power of your money is either going down. You can look at it either which way. And obviously some things get more attention than others. Not everything goes up evenly. Milk hasn't gone up as much as real estate's gone up or whatever. You know what I mean? Now, I don't know that for a fact. I'm not sure what price milk's gone up. I don't even drink milk. So the point is, though, that when it comes to this stuff, I harp on about the lower interest rates being a problem when it comes to personal living. And that's why I released an article recently. I think I've got that somewhere here. Let me try find that here for you. I released an article. Where the hell is it? Oh, it doesn't matter. Anyways, I titled it. I titled the article Trump's plan to lower interest rates across the planet. And obviously, actually, the Federal Reserve has already hit back, which is what I said they'd do. They'd hit back. They'd say, actually, we're not going to lower interest rates. We're happy where they are. We're going to be cautious. All this sort of crap. And the reason that they've done that is because they want to lower interest rates. Like every central bank wants to lower interest rates. They want to print money. They know they're in a system where they have to do this. They have no choice. They have to lower interest rates. But they need to sort of, create a little bit of uncertainty and, are we going to lower them? We're not going to lower them, this sort of thing. I'll explain more about that in another video. It's going to otherwise get too damn long. But that game will come to a point when I predict the next headline, which is that Trump's going to, fight back. He's going to call them idiots or retards or whatever. He called them boneheads once in 2017 or 18. I can't remember. And ultimately, that's what's going to happen. He's going to hit back. They're going to hit back. He's going to hit back. It's a little game. It's not real. They're going to lower interest rates. Okay, I promise you they're going to lower interest rates. And the Aussie dollar, obviously, this just tells me that they want to lower interest rates. Ultimately, that's the goal. All right. And in fact, here's another point I just want to make quickly. I'll just bring that up again. I saw something here that I was looking at earlier. Not that. That's Trump's new financial services plan for patriots. It's a very weird thing. Okay. So what you're looking at is the effect right here on the price of the 10-year treasury. So the US 10-year treasury, it's going down. And the only way this goes down is if someone buys them. That's the yield, right? So this happened here. This was like October. This was around the invasion in Gaza or whatever happened there. Bang, came down drastically. Money printing right there. That's no one said we're lowering interest rates. That's just bang, money printing, right? Went back up, bang, money printing, and we're doing the same thing again. So that's the Federal Reserve already lowering interest rates, despite the fact that they've come out and said they're not going to do it, or they're going to sit there cautiously and all this stuff. So they're doing it. Believe me, the private sector can't actually do that. They don't have the funds to impact. That's an enormous, trillions of dollars, right? You can't impact that yield. You can't impact that like you and me, the people, mums and dads buying bonds. I don't know who the hell buys bonds. No one buys bonds. This is a government thing, period. All right. So look, guys, I think I'll just leave it there with that. We're coming to a point where the interest rates are definitely coming down. There's uncertainty in the market in terms of people are afraid. They don't understand this stuff like I do. They're not buying. The market's sort of lulling a little bit. That's inflation coming down. Truly, though, the housing market is going to have to take off, because when you add more money to the system, the money will always seek a yield. It'll always seek something. It'll seek and find, a way to just go up with a continued inflation. So it's a fantastic time to be buying assets. Obviously, things like cryptocurrency is going to be going through the roof. Certain ones, there's 2.5 million cryptocurrencies, so don't go trading them based on anything I say. And hard assets. I think gold and silver will always suffer in high interest rate times. They are more they will go up this. They will go up this time, like 2011, all those sorts of times. They didn't, because the fact that there was less money in the system. There's so much damn debt in the system now that everything's literally going up. But real estate has a return. You can borrow against it. It's such an easy investment. It's so clearly going to go up. I've spoken to you guys a million times before about the fact that there's so many different people coming. Like, what was it, 1.5 million people since 2023 in this country? That's enormous. Housing shortage already on top of that number. And now we're guaranteed to see lower interest rates. We're guaranteed to see it. Like, it's literally coming so soon. Look, when I say guaranteed, this is my opinion. But when I say guaranteed in my mind, this is like 100%. You're seeing it already. The little Trump game, you're seeing it already with that they're talking about in Australia. So Federal Reserve literally is the central bank for the world. So just watch what they do. That's why I watch this stuff. I don't watch this stuff because I'm just riveted in watching some stupid yield. No, it's because it affects the real estate market here in Australia. Now, look, I'll leave you there, guys. Thanks so much for watching. You're probably going to have some questions. If you do, please just send through an email, a text. My details are all over the place. I think just below this video, you can just throw in your details. Even if I've already got them, it'll just notify us. We'll get in touch with you. Actually, it's a good way to sort of set up a quick 15-minute meeting between us to sort of, as a snapshot, see where you are, see what your position is, if you can actually do something, if you can buy. It's become a necessity now, ultimately, to invest in assets. It's become a survival mechanism. So, don't sleep on this. Just literally have the meeting with us. It's not going to cost you anything. We'd love to chat to you about it. And yeah, look, we're coming into some interesting times. There's so many interesting things happening in the marketplace right now. I'm excited, even though inflation's not a good thing. I'm excited because the people I work with, the people I work for, and my closest friends know how to combat this very nasty situation called, inflation. And there's many ways to come out of this on top, buying and selling, many ways to come out of this on top. So look, thanks so much. I'll chat to you guys soon, and appreciate always any viewership and any comments and shares and likes. Please do that. And then, just go ahead and get in touch with us down below. We'll talk to you very soon.